I've made a whole bunch of different mistakes investing in real estate. But despite those mistakes, I was able to retire. I think that's what we have to practice a little bit as well. Like go up to folks that you know and just say, "Hey, how do you do it?" Find somebody who's already doing what you want to do or where you want to be.
We were in negotiations.
Investing in real estate, they're winning, they're making money.
What's up, everyone? Welcome to the Real Estate Educators Podcast, where we provide the education you can build on. I am your host, Kevin Amolsch. This podcast, as you have heard many times, is so much fun because we're helping real estate investors and real estate educators build your career. So you're out there buying properties, you're out there investing in real estate, or providing content to real estate investors. This is the podcast for you. Super excited to have another special guest on the show, Mr. Tony Lopes. Now, you've been doing this for a little while. You learned early on, age 30, I think it was, that you needed something different than corporate America, and you started investing in real estate. And now you're a best-selling author, coach, mentor. So you're kind of doing it all. And I know you retired from the corporate world at the age of 44. So now you're out there making it happen, man. So welcome to the show.
Yeah, thank you, Kevin, for that very warm introduction. Yeah, none of what I do today would have ever been possible, or what I've done for the last 10 years would have ever been possible had I not started investing in real estate, right? That's why I'm so excited to talk about real estate investing, because I'm nothing special, right? I put my pants on in the morning the same way as everybody else. I'm not the sharpest tool in the shed. I've made a whole bunch of different mistakes investing in real estate. But despite those mistakes, I was able to retire early, right? So I kind of look at myself as being like, the poster child for, like, hey, if I can do this, anybody can do it.
I feel the same way. Now I got going in real estate because I was reading books. Now you got kind of looks sounds like a little bit like you got shoved in a little bit because of this layoff. Tell me what you were doing before.
Yeah, so I always share with folks, and it's a very relatable story because I think a lot of people grew up in this environment where, they were handed down tablets from their parents to say, go to school, get a great education, you'll end up with a great job, and you'll be taken care of forever because you got this great job, right? I certainly got those tablets handed down to me, and it's a very relatable thing. I think a lot of people get that. And so me as a young man, I didn't know much else then to follow that path of go to school, get a good education. I got a great education. I got a bachelor's of science in mechanical engineering, right? So I'm an engineer by education. And then I also went on to get my MBA, right? So I have two great degrees, and I ended up with a great job, really did. But then a few years after starting that job, I got laid off. And nowhere in the mantra that my parents, those tablets that my parents handed down to me, Kevin, nowhere did it say, go to school, get a great education, get a great job, and then you're going to get laid off.
Yeah.
That was
They don't
nowhere
they don't
part of
teach
the
that in
plan.
school, do they?
And they don't teach it. So yeah, for me, you're right. I had to figure it out pretty quickly for myself. I was laid off. I wasn't financially independent at the time. I was working a job, a W-2, which is great. I don't ever slam anybody who's working a W-2 because there's a lot of benefits from working a W-2. So if any of the listeners or viewers out there are W-2 wage earners, there is some goodness to that. So don't let anybody beat you up over that. Yes, we do like to get you to the other side of a little more financial freedom, and we can talk about that. But yeah, for me, I wasn't financially free. I had to find another job. But shortly thereafter of getting another job, I started looking at real estate because I knew I could do some of that stuff. I was as so to speak, trained as a mechanical engineer. I was very mechanically inclined. Um, Looking at different properties. I love to, be that spreadsheet jockey to, do the analysis. And then I also loved going on to properties and saying, hey, this doesn't look structurally sound. I can fix this. I can do this. I can do, right? So I was a very mechanical, hands-on kind of guy. So it just was a great fit for me. I never thought when I got into it, I never thought, oh, geez, this is going to be a means for me to retire at the age of 44. It wasn't like that, Kevin. It was just pretty much like, "Hey, I wanna have a backup plan." And
Now, you
that's how
made
I got
some
started in real estate.
you made some great points there that I just want to highlight. Yeah, there's nothing wrong with a W-2 job. I actually agree. It's most people, it's good. It's right. It's the right decision for, right? Because they don't bring it home at night. They could be with their family and being an entrepreneur doesn't necessarily have that luxury. But what you said is investing in real estate to help you in case something happened in the future. You chose to turn it into a career, but just being an investor, even with a W-2, that can change your life.
Absolutely. I mean, I mean, just real simple. I started investing in small multifamily buildings. A duplex, a quad, a 3-unit building, and I could make $1,000 a month. Now, $1,000 a month. I mean, you're not going to retire from that, but that's 12 grand a year. And once you have certain deductions, depreciation, that's almost like 12 grand of tax-free income. And, for some families, $12,000 a year of free cash flow, no tax on it, right? That can be life-changing for them. If they have kids I know you have kids, right? When kids start to, kind of come of age and they need a car to drive and they start going to college and then they start getting married and, right, the bills start to come pretty fast. And so to be able to have an extra $12,000 a year is pretty amazing.
Game changer.
And that's just with one building, right? If you can find one building that delivers that $1,000 a month, that's huge. Now, I always get excited because now you start to multiply it and you have that first building, and now you go another year or two later, you buy a second building that's doing the same thing. Now you're making $24,000 a year, right? And it just snowballs from there. So it can get very exciting.
Yeah. So you started off in the small multis and was it small multis or do you have like a single family home as your first? What was your first deal?
So really, my first deal was really the condo that I lived in, and I know so many people in real estate who are doing extremely well, um, who started with a condo, right?
Yeah.
I bought a condo. I was straight out of college. I didn't have a lot of money, right? I didn't have a lot for a down payment, so I bought a condo. But it was dated. It was vintage, as we would say today. For me as a kid coming out of college, I was like, wow, this is great. I bought my first place, but man, it needed new floors, it needed new cabinets, it needed new bathrooms, it needed virtually everything. But again, because I was, somewhat handy, right? I could do the painting, I could tear up the rugs, I could put down new flooring. There was certain things I was capable of doing. So that was really my first experience with buying something that I could do some value add, to use these new age terms, right? Value add. I didn't look at it as value add, right? I was just saying, hey, I want to make this property nicer, right? Um, but today we call it value add. So I was doing all this value add while I lived there, and then at some point, for me, I bought it for 50,000. That shows you the quality, the quality of this condo that I bought. I bought it for $50,000, 2 bedroom, 2 bath, and this is just let me see, 45 minutes north of Boston. It was in southern New Hampshire, so it wasn't like in some podunk village, right? It was 45 minutes north of Boston, to give you an idea. But I bought it for 50,000. I did some value add myself while I was living there, and I sold it for 175, right? So that allowed me to, my first deal, I was able to get a HELOC out of that out of that property because I bought it low. I was able to have a ton of equity, so I was able to do a HELOC for my first down payment on my first quad. And then from there, when I sold, I ended up with more cash that I was able to do another deal. So yeah, that's how I got started.
That's great. So your second deal when you bought the quad with it's like fourplex.
Yeah, that was my first deal. Oh
So
yeah, my second deal in terms of the condo was my first. The second was the quad. Yeah.
yeah. So your second deal was the quad, right? And for the listener, a quad is a fourplex. Or Denver, we call them fourplexes. But that was a no money down deal for you. I mean, you had a down payment, but it didn't come out of your pocket. You had set up a line of credit somewhere else. So that's a creative way to get into that deal.
Yeah, and to go back to the having a W-2 is not necessarily a bad thing. If it's not a HELOC, that you can do. Some people don't have the opportunity to do a HELOC. If you do have a W-2 job, I share with folks, and this isn't for everybody, right? So, for those that it doesn't apply to, just block your ears. It's okay. But for those that it applies to, you can leverage your 401k, right? Your 401k plan that you're investing into, you can borrow from that 401k for that first, nugget of cash you need for a down payment on a property or a partial down payment, and you get cash from someplace else. But having a W-2 job is great because it allows you that. Like me, I'm self-employed now. I don't have a W-2. I don't have a W-2. I don't have 401k. That's not someplace I can go and tap into. But for a lot of W-2 wage earners, right, folks who have jobs, that's a great source for a down payment, right? So just trying to be creative, offer some value up in terms of maybe some creative ways to find that down payment for your
Yeah.
first or second or third deal.
Yeah, I love it. My second deal, I used student loans for my down payment. So I
Oh,
also got into it without any money out of pocket. So no money
okay.
down is possible. You just have to be a little bit creative. We don't talk a lot about no money down on this show. So it's interesting that the conversation kind of went there, but the way you described it, I was like, does he realize that he just did a no money down deal? And does the listener realize that? So that's why I was pointing that out, Tony.
Yeah, I love that. I love how you drew that out of the conversation. Yeah, I don't necessarily always look at these things from that perspective, but that's exactly what it was. You're right.
Yep. Okay, so you had the quad and you rented that out for a little while. Um, and then how do you go from the small multifamily into bigger multifamily? Because I know, and I haven't shared this with the listener yet, but you are doing large multifamily projects now. So you stayed on the residential side of the business. You still went commercial, but you went to just larger multifamily. So walk me through the progression. Like, how do you even have the confidence mentally to do that?
It is a big leap, mentally, and you're right from a confidence standpoint. So the thing I share with folks, because I get that question pretty frequently, folks want to invest in larger deals, and I get it. Um, the biggest thing I share with folks is know where you bring value, right? So for me, I'll use myself as the example, right? I know I bring value from a property management execution perspective, right? I I love walking properties. I love looking at AC condensers. I love looking at roofs. When I go, this is actually a
You're an
true and
engineer,
funny.
yeah.
I am an engineer, right? We took a cruise. Me and my girlfriend, we took a cruise for the first time. Here I am, 53 years old, and I just took a cruise for the first time. And we were walking through the ship, and she was like, I bet you just want to go down like to the bottom of the boat and just really see like all the mechanics, like how the boat works and the turbines and the pumps. And I'm like, yes, I do. Like that's what excites me. That's what drives me. Obviously, when we tour a property, we need to make sure that the underwriting is done well and it cash flows and all the financials are right. That's a big piece of it, of course. But a big piece of it as well is the health of the property as you see it and being able to understand how much capex do I potentially need to put into a property, right? A lot of folks today are buying larger and even sometimes smaller properties that are, we'll use vintage, right? Maybe 1970s or older in some cases, and they don't plan sufficiently for capex, things that you can't see, things like sewer pipes, uh, wiring in a building, right? There's things that you walk a property you may not, see instinctively, but they're there and they can really eat your lunch. If you have to replace a sewer pipe, that can eat your lunch for the entire year. So that's my superpower, I'll say. When I walk onto a property, what I bring to big deals is being able to walk onto a property, look at it, and ask questions of the current property owner or the property manager, be able to ferret out some of those details, really dig into the property to bring back to the team what I found in terms of what are we going to need to budget for CapEx, right? And, certain value add things that we might be able to do to bring rents up. That's my superpower. Other guys are really great at like spreadsheet jockeys doing the underwriting, doing the waterfalls. God bless them. That's great. They can go do that. I'd rather hop on a plane and go take a look at a property. Other guys on the team, couple guys on our team, they're great at raising capital, right? So that's great. They can go do that. I can raise capital, but I'd rather go look at properties. That's really where my expertise and where I have a lot of fun doing this. But your superpower may be raising capital. So when you look to say, hey, I want to do a big deal, I want to go buy 100 doors, or I want to buy 200 doors, that's really how you get integrated with a team, is by coming forward and saying, hey, Tony, I know how to raise capital. Okay, great. Now I'm interested, because I don't really like to raise capital, right? That's not really my thing. I'll go look at a property all day long, but if you can raise capital, that's great. Now you start to become a little more integrated. That's your superpower that you bring to the team. If you kind of come to a team and it's kind of like, well, gee, I don't know how to underwrite, I don't know how to property manage, I don't know how to raise capital, I don't know, it really becomes hard to welcome somebody into a team. But if there's already a pre-existing team that right? Maybe your listeners, your viewers know some other folks who are doing great deals, and you're like, geez, you know what? I can raise capital. I know how to do property management. I know certain things. Go have a conversation with those folks, right? You don't always have to be, financially participating, right? To bring, say, hey, I'm going to bring $1 million of capital to this deal of my own money, right? No, there's other equity that we have between our ears that we know how to do really well. It could be the underwriting, it could be the property management, it could be something else, right? So I think we all need to assess that. If we want to do bigger deals, we need to have that conversation with ourselves and say, what do I bring to the table? And if the answer is nothing today, that's okay. But no, where do you want to focus? For me, it's always been like property management and kicking dirt. That's why I call myself Dirty Boots Capital, right? Because I love getting my boots dirty a lot of different ways. So that's why I call myself Dirty Boots, right? So assess what you like to do. And if it's being a spreadsheet jockey, that's fine. We need that. So
Yeah, it's interesting.
yeah,
So this is one thing that I love about syndication. You could do larger deals, obviously, as you're describing, but you're going to be more successful typically on a syndication deal than you would on a quad, for example, because of the point you're making. You're narrowing the focus of what you're doing to what you're good at. My guess is when you did the quad, you told me just now you didn't like spreadsheets so much. You don't like raising the capital so much.
I'll
But
I'll do
I'm
them. I'll do them,
assuming,
but it's not
yeah,
my
I'm
my
assuming you had to on your first few, right? You had to do the things
yes,
that
sir.
you're not really good at because there wasn't somebody else on the team
Yeah.
to do it. Now, as you evolve in your career, you're going to start enlisting team members, right? Maybe professional management or whatever it is. But on the smaller deals, you typically can't afford to put a big team together. But on the bigger deals, you can. So I just wanted to make sure that that point was clear, because you did a great job of describing that. But do what you're good at. That's how businesses are built too, by the way. It's not just syndication and real estate. Businesses do the exact same thing. I hire people that are smarter than me because they are better at that thing, right? And that's how
Yeah.
we've been able to grow at Pine. But you mentioned a couple of things here I want to mention. The sewer line thing, I think this is an important point we just breezed right past. This is the one thing in a real estate deal that you can't really see. So Tony, you can go into the mechanical room and look at the furnace or the boiler or whatever it is. But you can't see the condition of that sewer line. So even if it's a little tiny fix and flip house for the inspections, I don't think you need a full on inspections in every deal you do, because you're replacing most things.
Yeah.
But you should always do the sewer line. Do you agree with that?
I do, because it's such a big expense, especially in certain areas of the country where uh, they don't have basements, right? Before hitting the record button here, you and I were talking about going back to Florida, going to be looking at some
Yeah,
things down there. Florida, as we know, everything is on a slab, right? So these sewer pipes run underneath the units. There's no basement that we can access them. So if sewer pipes need to be replaced, it's kind of
it's
a big deal.
expensive. Yeah.
Yeah, it really is. You're displacing tenants if you have an emergency repair, right? You're putting them in hotels for, who knows. We've had deals where we put people in hotels for like a week. right? And that's a pretty big
I
expense,
just did
you
that like
know?
literally 3 weeks ago. I had to put a tenant up. Yeah, it
Yeah.
happens for
So
sure.
so it's not fun to, the sooner you can see some of that stuff and plan for it. And it's just experience, right? It's what you had, pulled forward from so to speak, my monologue there of, everybody brings their own superpower to the table and we all learn from each other. Believe me, I'm learning from my peers in terms of the underwriting they're doing. Right. And that's another thing with um, I see a lot of young folks getting into it. There's a lot of ego, which
Oh
I hate.
gosh. Yes.
There's a lot of ego in the conversations with them, and it's like, guys, there's still a lot of learning left to be had, and I'm still learning for sure. I just went to an event down in Coral Gables. It was a Florida middle market multifamily event. These folks own thousands and thousands of doors, super smart folks. And, they were just asking me like, hey, why are you here? What are you looking to do? Da, da, da. And I was like, hey, I'm just looking to learn from you super smart guys. Really. That's what I'm looking to do. Right. No ego. I think that's what we have to practice a little bit as well. Like go up to folks that and just say, hey, how do you do it? This is how I'm doing it. How do you do it? How can I do it better? Right? There's too
And
much
as you're building a team, right? Like this is a perfect
yeah.
point. Like you're going to need attorneys and accountants and contractors and all of these things. So you are, even if it's just you and your company, you still have to build a team around you. I just listened to a podcast this morning, actually, that talked about this, Tony, and they said the same thing that you were alluding to right now about the humility. When you're looking to build your team, the people that you want to hire or bring with you on your journey need to be hungry, humble, and smart. Those are the three things you're looking for. And humble is one of the three most important things you're looking for in a team.
Yep. Yep. You nailed it. You nailed it. Yeah. Nobody wants to work with a know-it-all, or at
No, I
least I
mean,
don't. I mean, I want to go out there. I want to have fun. I want to learn from people. I truly do. So definitely, for folks who want to get back to folks who want to build a bigger team, a bigger portfolio, buy bigger property, you certainly want to showcase where your strengths are. But you want to do it in a certain way such that it's not with,
sure.
a huge ego.
Yeah, you can't find your own blind spots with that ego. That's going to prevent your vision. This episode is brought to you by Pine Financial Group. Pine Financial is a private lender specializing in short-term rehab lending to real estate investors. Got a property that needs some love? We can help. We are able to offer funding solutions because we raise private money from individual investors. With more than 15 years of experience, Pine offers passive investors an alternative that provides stability, consistency, and security to your portfolio. If you like real estate but want to avoid the ups and downs and effort, a Pine mortgage fund could be a perfect fit for you. Accredited investors will experience an 8% preferred return and profit sharing. Diversify your portfolio out of Wall Street and into Main Street with a Pine Financial Group mortgage fund. Get more information at pinefinancialgroup.com. That's pinefinancialgroup.com. Let's move on to Renter Nation. You talked a little bit about that before we hit record. So tell me, what does that even mean?
Yeah, so it's real simple. It's just a nation where we have more renters than we have buyers of their own home. Really, it's a really simple concept, and it's pretty wild. I've been presenting on this for the last 3 years, and it's just really been even a journey for myself. And I'll give you a data point. When I started presenting on Renter Nation, so 3 years ago, the typical age of a first-time home buyer. What do you think the typical age of a first-time home buyer was 3 years ago?
Let me guess at this.
You're probably gonna
Yeah,
guess it right.
I'm trying to think about this because it's got to be in the 30s. It's only 3 years ago, so I know the whole millennial thing. They don't really like to buy; they want to move around, right? So
Yeah,
it's probably somewhere in the 30s. But since I don't
yeah.
know, I'm going to say maybe 35.
Oh, it was 36, right?
Oh, wow, that's crazy.
36 years old, right? And that was 3 years ago. And for the last 3 years, it's been going up. It's now 39 is I think it's 39 is the average age of a first-time home buyer.
Yeah, and the difference now,
Um,
Tony, isn't the millennials not wanting to buy. The difference now is it's because of the COVID run up, it's not affordable, right?
Yeah,
So
yeah,
it's not that
exactly.
people don't want to.
Yes, exactly. So, as they stay, non-buyers for longer, that basically means they stay renters for longer, right? So that's one aspect of what's happening here with Renter Nation. To your point, affordability and affordability in a lot of different ways. It's not just the interest rate being high or higher than it was, say, 3, 4, 5 years ago, right? So yes, we have, 6.5, 7% interest rates, and that makes things unaffordable. However, there's other factors driving affordability, like property insurance, right? Insurance has gone up for a lot of different reasons. We've just been hit with many natural disasters recently over the last few years, and insurance rates are just going up. So now premiums are more. Property taxes. I don't know anybody I've spoken to who said, gee, Tony, my property taxes have gone down.
No,
Nobody's saying that.
no.
Never. So property taxes are just going up. And for me, I can speak for myself, they're going up at like 25%, a year. And I'm like, really? Like this is unsustainable. So hopefully they do level off, but it's not just the rates, it's insurance, it's property taxes, and then it's also, to a large degree, energy costs. Energy costs have been going up. Everything from electricity to home heating fuels have been going up. Look, I'm looking to install a wood stove in my house because I have a ton of trees around me. I cut down, I split the wood, and I want to be able to start burning wood because it's just more affordable. Because the price of propane in my neighborhood has just gone up, and I'm like, I just don't want to be paying that bill anymore. So I want to get away from it, and I think everybody's feeling the pinch for fuel. And so there's a lot of reasons it's home ownership is unaffordable. And I'll even expand on the energy piece, right? Everything that goes into our house takes energy, right? It stems from, fossil fuels, right? You want to put in a new driveway, asphalt driveway. Well, that's a petroleum-based product. You know, that's going to cost you more today than it did 5 years ago, right? You want to put a new roof on the house, that's going to cost you more today than it did. New carpets more today than it was, right? So, as far as home ownership goes, you buy a home and you want to do some upgrades, or you even have to do some replacements of things, appliances or heating systems. It's just going to cost you more. So, it's not just homes are unaffordable from the standpoint of the interest rates. There's these other factors that are just
Yeah, it's even
making it
bigger than
unaffordable.
that. I mean, the price of eggs impacts it because then you don't have the discretionary income, right? So it's just all of inflation. But yeah,
And
you're pinpointing some that have really impacted housing, but it's really the entire thing.
yeah, and it's also, this concept of renter nation is also taking a look at getting away from the cost of things, like you were alluding to. There's also these societal factors where we look at things today that exist today that never existed before. Things like Instacart, right? You can just go on your app and order up your food. People don't want to go and shop for their own food. They want to just order it up on Instacart, go there, somebody puts it in the back of their trunk or delivers it to their house. They don't have to shop for their own groceries. And that's okay. I'm not saying that's right or wrong. I'm just saying what is. There's a business today where you don't have to go shop for your groceries because society is saying, I'll pay extra for that, right? Not only that, there's folks, not only do they not want to go and shop for their groceries, they don't even want to cook their food if they had those groceries, right? That's why Grubhub, Uber Eats, DoorDash exist today. Never existed before. It exists today because there's a business model. Society is saying, I want that. There's a need for it. So when you look at these things and people don't want to shop for their own groceries, they don't want to prepare their own food. Do you think they want to be painting trim on a weekend or
Right.
raking the yard or doing those homeowner type tasks? They don't even want to shop for their own groceries. And I'm
The
not
only
saying
thing
that's
they
good or bad.
delivered
I'm just throwing out society today where we are.
when you and I were growing up, Tony, the only thing they delivered was pizza.
Yeah.
We ate a
Yeah.
lot of pizza in my house growing up.
Yep,
All right, so what
exactly.
do you think about the price of homes going up at such a rapid pace because of the stimulus and the low interest rates after COVID and rents not keeping up? So I believe that rents have not kept up with values. Now that's probably different in the apartment world where you're in. But do you think that's impacting Renter Nation at all? Just it's just cheaper?
Ye for now.
Right. So
For now it is.
I'm curious what you think about what I just said, but also tell me a little bit about the opportunities for our listener. Like, how can we benefit from what we're hearing from you?
Yeah, so right now, you're right. The cost of homes have increased, and from a monthly cost basis, it's more expensive to own a home than to rent today. Rents, yes, we've heard a lot about rents going up, but there's still a huge disparity between what it costs to rent and what it costs to own. In some areas, it could be like over $1,000, right? So when we look at, and I do a lot of research on this, obviously, as do you, and we want to make sure we get it right for not only us as investors, but also for our investors. We need to make sure we get this right. I mean, we're dealing with real money, people's savings, the whole bit. We need to make sure we get this right. So when we look at it, we see it as tremendous upside opportunity where rents are going to continue to grow. That gap that I just showed you is going to get narrower and narrower and narrower until it starts to, become off balance. And then folks will take a look and say, well, gee, maybe it makes more sense for me to buy a
Right.
home because now buying a home is cheaper. We're far from that. Very far. So I think over the next 10 years, based on what we're seeing, we're positioned very nicely to be able to continue to increase rents and provide, great cash flow and great, equity returns to our investors, because that's just going to continue. That's just the economics of things, unfortunately.
Do you underwrite for that in your deals? Do you put increases in your performance?
So we do. Right now, we're underwriting very conservatively. We're not underwriting with any rent growth, to be honest.
Okay.
We're not, we're just saying rent is going to be the same for the next 2 years. That's just, again, just how we do it. We're very conservative, right? Because we want to make sure if there's any blips over the next 2 years, we can absorb those blips. We don't want to be so aggressive and say, "Oh, gee, rents are going to increase at 3% or 5%." If they do, that's a bonus. We'll take it. That's a bonus. But we want to be conservative um, right now. And so as we look 10 years out, can I say with confidence rents are going to be higher in 10 years? Yes, absolutely. I can say with confidence. In the next 2 years, they're depending on which areas you're operating in, there could be some bumps in the road where it may be stagnant for a year or two.
Yeah. And the reason for that seems to me is there's a consolidation. Like people are starting to move in together to afford it because of everything that's going on. So there's just less demand. So now when you know what's going on right now with the tariffs and trade wars and all of this, and it's who knows what the long-term outlook is, but the short term, we're probably going to see some more inflation, right? I mean, it's just there's no way around that, which could impact interest rates. So when you're underwriting a multifamily deals for the listener is very sensitive to interest rates. The cap rates will move when interest rates move. So that affects value. So are you underwriting or stress testing for a possible increase in rates?
Uh, so so we're underwriting somewhere around 7% for interest rates. So which is a little conservative again, because we can get below that, but we typically use around 7 just to protect ourselves. We do see in the next, again, when you look out, say 5 years, we see interest rates going down. We do, as far as the economic cycle of things. We see that going down, but we don't underwrite for that, right? We always try to be conservative. So that's how we do our model today. We're very conservative with rents. We're very conservative even with insurance. There's some markets where insurance is starting to actually go down in some
Really?
markets.
That's great.
Yeah, yeah, it's interesting what people are seeing, and but when we underwrite, w- again, we're very conservative and we underwrite at the current insurance rates. We're not forecasting that, hey, we're going to bankroll by insurance going down. But if it happens, great. That's a positive thing for our investors and for ourselves, right? But until that happens, we don't want to take it to the bank. There's too much volatility right now. To your point with tariffs, I was watching the stock market today, and I think it opened in the red, like negative like 600 or 500, and then just here at lunch, it was like plus 2400.
Yeah, it's
And I'm
crazy.
like, How can that be? There's just so much uncertainty, so much volatility in the space today. I know developers who are just like really questioning whether they want to be building and developing new projects today because of the cost, not just
Well,
the
we don't know what's
cost.
going to happen to the cost of material. We really don't know. There's so many question marks, which is why you're seeing the
Yeah.
volatility. Now, we are recording this on April 9th, and it's 1 week ago today that the reciprocal tariffs hit. So we're only 1 week into this
Mm,
fiasco, or I don't know what you want to call it, but
yeah.
it's going to go on for a while. So by the time this drops, who knows what it's going to be? But yes, to your point, today it's up. Yesterday it was down.
Yeah, and it goes beyond the tariffs. It's also the change in the immigration policy,
Yeah,
right?
and
I
the
mean,
government
a
layoffs.
lot
There's
of
a lot. There's a lot here.
right. So when you look at these developers and they're facing into, how much am I going to pay for material? How much am I going to also pay for labor,
Labor. Yep.
right? Because if those immigrants aren't here, whether legally, illegally, whatever the situation is, if there's a net negative drawdown on labor, that's going to increase the cost of labor. It's also going to increase the duration that project is going to be going on for, and so you have to plan for that in your financials that you're going to be carrying it for longer. So yeah, there's a lot of moving parts there, and so for that reason, that's just another reason where we see rents going up. Maybe not over the next year or two, but definitely in the long term, 10 years from now, rents are going to be higher because these development projects are going to be stalled because of this uncertainty we're talking about, these new developments. There's going to be less inventory for folks to move in. And so when I speak about this, I say it's scarcity. When we have scarcity, this is just economics 101. When we have scarcity in a market, prices go up. And that's what's going to happen with rents.
Yep. That's what's holding real estate values where they are, even with the higher interest rates, by the way. Not enough inventory. That's gonna create a floor. So we're not seeing the crash that everyone told me they were going to see. All right. So we gotta move on here a little bit, but I want to hear a little bit about your podcast. I don't even know the name of it here. My sheet does not tell me what it is. So why don't you tell us about your podcast and
Sure.
what are you doing on that show to help real estate investors?
Sure. So the name of it is real simple, Dirty Boots Capital podcast. What we do on there is we just bring on guests to just kind of have these fireside chats, just like we're doing here, just to talk like just two average guys, just noodling it through, trying to figure this out. Hey, I don't have all the answers. I'm not going to pontificate and pretend that I do. I don't. You do a lot of research. I love hearing from you. I love hearing from other folks out there in the business. I I do multifamilies. That's my swim lane. That's what I like to think I know the best. Right? I'm always learning, but I that's the area that I enjoy. I just had on a guest. She's in the self-storage unit business. And so she provided great. We're going to be releasing that video here soon. I just had her on recently, but she walked us through like, hey, here's how you can find a self-storage unit to purchase. Look for this, look for this. And she gave tremendous value to
Great.
the viewers, to the listeners, to be able to help them. And that doesn't necessarily benefit me because I'm in the multifamily space, but if I can interview some other interesting people like that who can add value to our listeners. I've had other folks on talk about mindset, right? To do real estate, man, we go through through these oscillations, these peaks and valleys. You really have to have a good mindset to be able to stick with it each and every day. Someday, you're going to be looking at a deal and it's going to be, all roses and things work out. The next day, that deal may be off the table for number of reasons. So you really have to be strong from a mindset perspective. So yeah, I have folks on from a variety of different fields like that, mostly real estate related to help people, regardless of what real estate they're looking to get into. But that's really the focus. Like yourself, just trying to help people. I don't gain anything from this. I love doing it. Um, but it's really just to help people out there.
Yeah, and that's what you're doing with your book and your coaching and all of that. So what's the title of the book?
Freedom at Risk: How to Protect Your Personal and Financial Freedoms. Yeah, so as I was writing that, I share with folks, Kevin, I share with folks that wasn't supposed to be a book at all. Kind of like the behind the scenes. I don't have kids, but I have a niece and I have nephews that I obviously love, and I want them to succeed in amazing ways. And I know they're not learning certain things in school, right? As young adults, they're coming out not knowing certain things. So I
Yeah.
said, I want to put together a few things to help them, right? So this came from a place of love is basically what I'm sharing. It came from a place of love where I sat down and I started to write out some things and I thought it was going to be like, hey, 20, 30 pages worth of stuff, maybe. Well, I was on to like 35,000 words and I was like in like 200 pages and I was like, holy cow, this is a book. This isn't like 20, 30 pages anymore. So I had to go off and I had to get an editor and I had to get a graphics designer and a publisher and all those sort of things, right? Those are things. And again, this is something like we need to realize we're not experts at everything, right? So when you're doing real estate, don't try to play the role of the real estate attorney. Go get a real estate attorney who's been doing it for years and is trained, right? Or a CPA who knows real estate. Go get that person, right? Just like me, when I was writing that book, sure, I know how to pontificate about certain things and try to help on certain things, but I'm not an editor. I'm not a publisher. I'm not a graphic designer. I had to go hire those people to help me, right? So that's an aspect we all need to keep in mind. But that's where the book came from. It really came from that place of love of trying to help my family, my niece, my nephews, really help them see things they weren't getting from the public school system. So it really helps them understand, the first part is all about, the structure of how our freedoms are being stolen. And it's not to be doom and gloom. We took a lot of time with the editor not to be doom and gloom. I know the the freedom at risk title is very, it can be seeming doom and gloom, but it catches you. And so the first part of the book is really just to explain how our freedoms are being, eaten away. And then the second part is really the how to, an a la carte package of, hey, here's a bunch of different ways, everything from real estate to starting your own business to investing in stocks, bonds, notes, different things, right? It's really an a la carte package. There's nothing in there. You're not going to get a prescription from me to say do step 1 through 3 and you'll be taken care of. It's not like that. It's what you gravitate towards. So when you go through that a la carte package, you'll find some things that really interest you, and then you go dig into that some more, right? So that's really the intent.
Yeah, that's great. Freedom at risk. So I'm definitely going to get that and take a look, check that out. Coaching, you do some coaching. I'm certain that your podcast and your book, those are like top of line funnel type stuff, and you're trying to weed them down to either invest in your company to do syndications or possibly coaching. Do I got that right?
Yeah,
Yeah.
exactly.
So how do we, well, I'm going to get to your contact information if we want to check out the podcast or the book or your coaching program or any of that. But before we do that, what I would like to do, Tony, is go through my notes. I took some notes as we were having our conversations, trying to extract some information to help our listeners out. So I'm going to go through the notes. You tell me what I missed, if anything, how I did, and then if you would be so kind to share one final thought with our listeners, and then we'll get your contact information.
Sure.
All right. So we started off talking about your journey from W-2 to retiring. And then we say retire, but you're not retired. You just stopped working for somebody else and started doing what you love and started taking back your freedom. So it's okay, though, to be a W-2 employee. In fact, a lot of people benefit highly from that. If you do decide to stick to the W-2 because you're doing something you love, great. Also consider some investments just in case there's a layoff or some unforeseen thing. You and I both chose real estate. It could really change your life. And then you talked about how you could do one deal and it just snowballs into do the next deal and the next deal. And then you have then you start creating this passive income. And that's what really creates the freedom. So whether you're doing the job you love or not, that passive income creates freedom. No money down is possible. We touched on that a little bit with the HELOC, but you also went further and talked about borrowing from your 401k. But there's lots of different. I mentioned the student loan. There's lots of sources of capital out there. You just got to get a little bit more creative. And real estate allows for that, right? Very different than stock market investing or something like that, where it's sort of limited. Real estate is very broad, you could be very creative. Know where you bring the value. And we went on for a while on this one. I think the majority of the show was this topic. Do what you were good at, bring people onto your team that do what they're good at. And that's what's going to create the magic, right? And then you said very late in the episode, don't play a role. And by play, like being an actor. Don't pretend to be something you're not. And the example you used was a real estate attorney. We talked about first-time home buyer is now at the age of 39. There's several reasons for that, but in any case, that is helping create the renter nation, which we're going to try to benefit from. The biggest opportunity is the rents should be increasing for the foreseeable future. It's obviously location specific, but I 100% agree with you, Tony. It has to catch up. Real estate values have gone up too far, too fast, especially on the residential side, which is why we're seeing it stall out now, but rents are continuing to increase. I think that's all I got. We talked about Dirty Boots Capital podcast and the Freedom at Risk book. We did not hear much about your coaching. So maybe tell us a little bit about your coaching, final thought, and then how do we get a hold of you? Before I do all that, how did I do on my notes?
You did fantastic on your notes. I'm going to add a couple of things to those notes,
Okay,
though.
great. Let's do it.
Of value, because I'm all about, I want folks to get a tremendous amount of value from our conversation. So,
okay, great.
So for anybody who wants a copy of the book, Freedom at Risk, How to Protect Your Personal and Financial Freedom, just, and I'll give the contact information, just shoot me an email with the subject line book. Just shoot me an email at tonylopes@dirtybootscapital.com. Right? Tony Lopes, Lopes with an S, Tony Lopes at dirtybootscapital.com. Put the title subject as book and give me your address, where to send it, and I'll get you out a copy of that book
That's
to
great.
help
Thank you
with
for
any
that, Tony.
value. Oh, so welcome. I'll also share the name of another book that has helped me just calibrate me in terms of not being the one who's trying to do everything in the business, right? And that's a book by Dan Sullivan called Who Not How. Right? It's a great, easy to read book. Who Not How. It really helped to calibrate me on, finding out the who's in my life to do those hows rather than me trying to figure it out. So that's another great book that I recommend all the time. One other thing that I'm going to add to your notes, we spoke about folks who, maybe want to start doing bigger deals, and we spoke about where your superpower is and bring that. Even if you don't want to do a bigger deal, maybe if you're trying to do your very first deal or your second or third deal, if you want to grow within real estate and you're maybe a little flat-footed or not certain where to turn, I share with folks a lot of times, like, find somebody who's already doing what you want to do or where you want to be, right? If they're already there, seek them out, right? Go have a conversation with them. Go buy them a cup of coffee or a drink, right? Or whatever it is, right? Go seek them out and go lean on them. Have a conversation with them. If they're already there, don't struggle, learn from them. So that's certainly something that has helped me tremendously in my career, is seeking out those people who are already doing what I wanted to do. Why do I have to recreate the wheel? I'm just going to go learn from them, right? And that's helped me get where I am today. So that's been great. As far as the coaching that I do, it's very individual based. It's all I do is one-on-one coaching, right? I don't do group coaching sessions. For me, I really immerse myself into that individual's world in terms of, psychologically, like what's going on and where they truly want to be or think they want to be, but maybe not really. Some of it becomes more of a psychological diagnosis of things. We do talk about, like, I have a number of folks who, like, they'll be like 50 years old and they'll be like, which is fine. I mean, they're entering into a new phase of their life and they're like, gee, I always wanted to do this. And that's great. Okay, but what's been preventing you for the last, 2, 3, 4 decades of doing something, right? We need to understand that. We need to understand where that resistance lies, right? If there's something mentally that's been preventing you for the last 20 years investing in real estate, it's pretty important that I know that and I help you get over that, because sometimes it starts like an onion. It starts like with a core. We sometimes maybe tell ourselves a story where, oh, gee, real estate is hard, and then we put another layer on top of it. Real estate, wow, you need a lot of money to do real estate. And then another layer comes on when we talk to our neighbor about it. And our neighbor says, oh, gee, that's very risky. Be careful, Tony. Don't do real estate. It's very risky, right? So we get another layer, right? And so pretty soon, all these layers after 20 years has formed on this onion. And I need to tear those back and try to help you know yourself a little better. Because again, mindset's a big piece of this, and I need to help you get over that, over those fears, over those stories that have been fed to you. Um, and that's a part of the coaching, is really understanding that. And then we also go into what's right for an individual, right? Sometimes jumping into a syndication from 0 to 100, jumping into a syndication may not be the right thing. I mean, when we do big deals, we look for folks who have already have experience in real estate, right? Because experience is knowledge, and that's power for us. So we do share, hey, what's right for you? Is it a condo, right? Some people don't have a lot of money for a down payment, so maybe a condo may be a good fit for them, right? It's lower cash flow, but it may be a better fit. So is that a good fit? Is it a single family that maybe they can add an ADU, right? An accessory dwelling unit, right? If they're handy, right? I'm very handy. I can go in there, I can build, I can paint, I can, add an ADU and sweat equity. I can, increase my financial independence through that sweat equity. So is that an option? Some people are handy. Some people are attorneys and doctors, and they're great at what they do, but they're not very handy. So maybe that's not the best approach for them, right? So we try to help them understand who they are and where in the market they may fit the best. And then we do a whole bunch of work around that to help them be successful.
Right. That's great. I think you gave me my final question was the last piece of advice, but do you want to say real short, say anything else, or on to the contact info?
I think we've delivered
I
a
think you
ton
did
of
a great
value.
job.
Yeah, I think so. Yeah, contact info. They can always go to my website to see more of what we do at dirtybootscapital.com. And then if any questions as a result of either this conversation here or anything else, just shoot me an email, Tony Lopes at dirtybootscapital.com.
Tony Lopes, Lopes at dirtybootscapital.com. Tony, you are a busy guy. I know you're doing a lot of one-on-one coaching. You're helping your investors, you're helping your teammates on your syndications, and you still gave us almost a full hour of your time. That's super valuable to me and super valuable to our listeners. So thank you so much. And for the listener, there's lots of podcast options out there, and you chose the Real Estate Educators podcast. I hope you got as much value out of this episode as I did. Tony Lopes is fantastic. I learned a ton, as you know, from my notes. If you did get the value, 5-star review, please. That's how we grow the show, the audience, and help more real estate investors like you. So share it with a friend, 5-star review. I hope you make this day a great one. Thanks, Tony. Hey guys, I hope you enjoyed this episode as much as I did. If you did, please be sure to follow and leave us a review. Oh yeah, and tell a friend.